How to become a successful stock market investor. Becoming a successful stock market investor requires a combination of knowledge, discipline, and patience. Before we dive in, it's important to note that investing in the stock market can be risky, so make sure you do your own research or consult with a financial advisor before making any decisions. First things first, let's define what investing in the stock market means. Essentially, when you buy a stock, you're buying a small piece of ownership in a company. As the company grows and becomes more successful, the value of your stock will likely increase, allowing you to make a profit. Here are some steps you can take to become a successful stock investor. 1. Do your research. Before you invest in any company, it's important to thoroughly research the company's financials, management team, and industry trends. This includes looking at the company's income statement, balance sheet, and cash flow statement to understand its financial health. Additionally, it's important to understand the industry the company operates in and any potential risks or opportunities that may impact the company's future performance. 2. Create a diversified portfolio. Diversification is key when it comes to investing in the stock market. By investing in a variety of different stocks, industries, and sectors, you can reduce your risk and increase your chances of success. Diversification can help protect your portfolio against the impact of any one stock or sector performing poorly. 3. Have patience. Investing in the stock market is not a get-rich-quick scheme. It's important to have patience and a long-term mindset when it comes to investing. The stock market can be volatile in the short term, but over time, the market has a tendency to go up. Instead of trying to time the market, focus on building a diversified portfolio and holding on to your investments for the long term. 4. Stay disciplined. Stick to your investment strategy, and don't let emotions or short-term market fluctuations affect your decision-making. It's easy to get caught up in the hype of a hot stock or sell in a panic when the market drops, but these reactions can lead to poor investment decisions. Instead, stay disciplined and stick to your investment plan, even when the market is volatile. 5. Continuously educate yourself. The stock market is constantly changing, so it's important to stay informed and continue learning about the market and different investment strategies. Read financial news, books, and take online courses, attend seminars or webinars, and listen to podcasts to stay up to date on the latest market trends and investment strategies. By continuing to educate yourself, you'll be better equipped to make informed investment decisions. 6. Avoid chasing hot stocks. It can be tempting to chase the latest hot stock, but this can be a recipe for disaster. Instead of trying to time the market or chase after the latest trend, focus on building a diversified portfolio and researching companies with strong fundamentals. Remember, becoming a successful stock investor takes time and effort, but by following these steps, you can increase your chances of success. Investing in the stock market carries some level of risk, but with the right mindset and strategy, it can also be a great way to grow your wealth in the long term. Thanks for watching, and as always, make sure to like, comment, and subscribe for more financial education content.